Financial freedom, it's a phrase that echoes in the hearts of many, a beacon of hope and a promise of security. We all long for the day when money is no longer a source of stress, but a tool to design our ideal lives. But achieving this dream requires more than just wishing. It demands a solid understanding of our finances and a commitment to making smart choices today for a brighter tomorrow. Imagine a life where you can pursue your passions without the constant worry of bills. This essay will serve as your roadmap, simplifying the complexities of personal finance and empowering you to take control of your financial destiny. The video is for educational and entertainment purposes only. It is not financial advice. Just like a sturdy building requires a strong foundation and supporting pillars, financial freedom rests upon three fundamental concepts: budgeting, saving, and investing. The video is for educational and entertainment purposes only. It is not financial advice. Budgeting forms the bedrock of this structure. It involves meticulously tracking your income and expenses, understanding where your money goes, and making conscious decisions about how to allocate your resources. By creating a realistic budget, you gain control over your finances, ensuring you have enough to cover your needs, achieve your goals, and avoid unnecessary debt. Saving, the second pillar, is about building a safety net for the unexpected and accumulating funds for future goals. The third pillar, investing, focuses on growing your wealth over time. Throughout this journey, remember that financial freedom is not a destination, but an ongoing process. Thank you for watching our channel. If you found this video helpful, please like, subscribe, and hit the notification bell for more insightful content. Stay tuned for our next video. Often met with resistance and perceived as restrictive, budgeting is often misunderstood. Many view it as a financial straitjacket, limiting their spending and hindering their enjoyment of life. However, the truth is far from this misconception. Budgeting at its core is about empowerment, providing clarity and control over your financial well-being. Think of a budget as your personalized financial roadmap, a guide that helps you navigate your income and expenses effectively. By embracing budgeting, you transition from a place of financial uncertainty to one of informed decision-making. The first step in crafting an effective budget involves understanding your income and expenses. Start by listing all your sources of income, including your salary, wages, bonuses, side hustles, or any other regular payments you receive. Next, create a comprehensive list of your expenses. This includes both fixed expenses, which remain relatively consistent each month, and variable expenses, which tend to fluctuate. Fixed expenses typically encompass rent or mortgage payments, utilities, loan repayments, insurance premiums, and subscription services. Variable expenses, on the other hand, encompass categories like groceries, dining out, entertainment, transportation, clothing, and personal care. To gain a comprehensive understanding of your spending patterns, consider tracking your expenses for a month or two before creating your budget. Remember, the goal is not to restrict your spending unnecessarily, but to gain a clear and honest picture of your financial flows. The power of categorization, unveiling your spending habits. As you delve deeper into tracking your expenses, you'll begin to notice patterns and trends in your spending habits. By categorizing your expenses, you gain valuable insights into where your money is going and identify areas where you might be overspending or have opportunities to save. Common expense categories include housing, transportation, food, utilities, healthcare, entertainment, debt repayment, and personal care. You can further customize these categories to align with your specific spending habits and financial goals. Once you have categorized your expenses, analyze your spending patterns. By understanding your spending habits, you can make conscious decisions about how you allocate your money. Budgeting tools and strategies. Navigating your financial path. Creating and maintaining a budget doesn't have to be a daunting or time-consuming task. Thankfully, a plethora of budgeting tools and strategies are available to simplify the process and make it more manageable. From traditional pen and paper methods to sophisticated budgeting apps, you can choose the approach that best suits your preferences and tech savviness. For those who prefer a hands-on approach, a simple spreadsheet or notebook can be an effective way to track income and expenses. If you prefer a more automated approach, consider exploring budgeting apps. Popular budgeting apps like Mint, YNAB, You Need a Budget, and Personal Capital offer a range of features, including goal setting, bill payment reminders, and investment tracking. Regardless of the method you choose, the key to successful budgeting lies in consistency and discipline. The importance of emergency funds. Financial wisdom dictates that one should always be prepared for unexpected events, and an emergency fund is the cornerstone of such preparedness. An emergency fund is essentially a financial safety net designed to cover unexpected expenses such as medical emergencies, urgent home repairs, or unforeseen job losses. This fund serves to protect your budget and long-term savings from being disrupted by sudden financial demands. The importance of an emergency fund cannot be overstated. It provides not only financial security, but also peace of mind, knowing that you are prepared for life's uncertainties. Without this buffer, any unexpected expense can lead to debt or the need to sacrifice important long-term savings goals. Starting an emergency fund might seem daunting, especially if you're living paycheck to paycheck. However, even small, consistent contributions can quickly add up. Setting realistic saving goals. Setting realistic saving goals is pivotal in creating a robust financial plan. Goals give purpose to your saving efforts and help maintain motivation over time. When setting these goals, it's crucial to make them smart, specific, measurable, achievable, relevant, and time-bound. This framework ensures that your goals are clear and attainable, and it provides a timeline for achieving them, which can greatly increase your chances of success. A specific goal might be saving for a down payment on a house or funding a vacation. To make it measurable, determine exactly how much money you need to save. Ensure the goal is achievable by reviewing your budget and determining how much you can realistically save each month. The role of high-yield savings accounts. In the quest to maximize savings, where you store your money matters as much as how much you save. High-yield savings accounts play a crucial role in this aspect by offering higher interest rates compared to traditional savings accounts. This means your money works harder for you, earning more over time without any additional risk. High-yield savings accounts are typically available through online banks, which offer better rates than brick-and-mortar institutions due to lower overhead costs. These accounts are an excellent place to keep your emergency funds or short-term savings, as they provide easy access to your funds while still accruing decent interest. When choosing a high-yield savings account, it's important to consider factors such as the interest rate, fees, minimum balance requirements, and the ease of access to your funds. Creative savings strategies. Beyond traditional saving methods, numerous creative strategies can help you boost your savings without significantly impacting your lifestyle. These include tactics like implementing a no-spend day or weekend each month, using cashback apps and websites when shopping, or selling items you no longer need. A no-spend day involves not spending any money on non-essential items for a full day or even a weekend. Cashback apps, on the other hand, offer a way to earn money back on purchases you were going to make anyway, effectively saving you money. Engaging in these creative saving strategies can make the process of saving money more interactive and fun. Investing, the very word, can conjure up images of Wall Street tycoons, complex charts, and a risky game reserved for the wealthy. However, the reality is far more accessible and less intimidating than it might seem. Investing is simply the act of putting your money to work for you, allowing it to grow over time and potentially build wealth. It's about making your money work smarter, not harder. Instead of letting your savings sit idle in a bank account, investing allows you to participate in the growth of companies, markets, and the economy as a whole. While it's true that investing involves some level of risk, understanding the fundamentals and adopting a strategic approach can significantly mitigate those risks. We'll explore different investment vehicles, from stocks and bonds to mutual funds and real estate. Before diving headfirst into the world of investments, it's crucial to understand your risk tolerance. Risk tolerance refers to your capacity and willingness to handle fluctuations in the value of your investments. Just as no two individuals are alike, our comfort levels with risk vary significantly. Some investors are comfortable with higher risk investments that have the potential for higher returns, while others prioritize stability and prefer lower risk options, even if it means potentially sacrificing some growth. The key is to find an approach that aligns with your financial goals, time horizon, and emotional comfort level. One of the most fundamental principles of sound investing is diversification. Just as you wouldn't put all your eggs in one basket, you shouldn't put all your investment capital into a single asset or sector. Diversification is about spreading your risk by investing in a variety of asset classes, industries, and geographic regions. The idea is that if one investment performs poorly, others in your portfolio can potentially cushion the blow. Diversification helps to mitigate risk and smooth out returns over the long term. A well-diversified portfolio might include a mix of stocks, bonds, real estate, and potentially alternative investments like commodities or precious metals. The power of long-term growth patience in investing. Investing is a marathon, not a sprint. It's about adopting a long-term perspective and resisting the urge to chase quick profits or make impulsive decisions based on short-term market fluctuations. The stock market, like life, is cyclical. There will be ups and downs, periods of growth and periods of correction. The key to success lies in riding out these fluctuations and focusing on the long-term potential of your investments. One of the most powerful concepts in investing is compound growth. The longer you stay invested, the more time your money has to compound, potentially leading to significant wealth accumulation over the long run. Venturing into real estate, building wealth. Brick by brick. Real estate stands as a tangible and potentially lucrative avenue for building wealth. Unlike stocks, real estate offers tangibility, investing in physical assets. For many, real estate is a cornerstone of wealth building. It offers rental income, appreciation, tax advantages, and satisfaction. However, real estate comes with risks and requires careful consideration. Conduct thorough research and understand market dynamics before investing. Securing your retirement. Retirement might seem distant, especially for those just starting their careers. Start planning early to enjoy your golden years without financial worries. Envision your ideal future and take steps today to make it a reality. Create a nest egg for financial security and pursue your passions. Determine your retirement goals and develop a savings strategy. Utilize retirement plans like 401, Ks and IRAs for tax advantages. Start early, contribute consistently, and choose suitable investments. Navigating debt strategies for financial freedom. Debt. It's a word that often carries a negative connotation associated with financial burden and stress. While it's true that high-interest debt can hinder your financial progress, not all debt is created equal. Understanding the different types of debt and developing strategies to manage and eliminate them is crucial for achieving financial freedom. Good debt, such as a mortgage on a home or a student loan that invests in your education, can potentially lead to long-term financial gains. Bad debt, on the other hand, typically refers to high-interest debt, like credit card balances or payday loans that can quickly spiral out of control and erode your financial well-being. The first step in navigating debt is to create a comprehensive inventory of all your debts, listing the balances, interest rates, and minimum payments. This will give you a clear picture of your debt landscape and help you prioritize repayment strategies. Focus on paying down high-interest debt first, as it accrues interest quickly and can trap you in a cycle of debt. The importance of financial literacy. Continuous learning for lasting prosperity. In the ever-evolving world of finance, knowledge is power. Financial literacy, the ability to understand and effectively manage your finances, is not a destination, but an ongoing journey of learning, adapting, and making informed decisions that empower you to achieve your financial goals. It's about equipping yourself with the knowledge and skills to navigate the complexities of budgeting, saving, investing, debt management, and other aspects of personal finance. The good news is that you don't need to be a financial expert to achieve financial well-being. Numerous resources are available to enhance your financial literacy, from books and articles to online courses, podcasts, and financial counseling services. Embrace a mindset of continuous learning. Stay informed about financial news and trends, explore different investment strategies, and seek guidance from reputable financial advisors when needed. The empowering journey of financial control. Financial freedom is about security, control, and peace of mind. It's about pursuing passions, supporting loved ones, and living aligned with your values. Every small step brings you closer to your financial goals. Embrace budgeting, saving, and investing for a secure future. Financial freedom is an ongoing journey, your path to a secure and fulfilling future. Start by implementing the strategies outlined in this essay. Create a budget that aligns with your income and expenses, establish an emergency fund to cushion against unexpected events, and explore investment options that align with your risk tolerance and financial goals. Remember, you don't have to navigate this journey alone. Seek guidance from reputable financial advisors, explore educational resources, and engage with online communities to learn from others' experiences and gain valuable insights. Financial freedom is within your reach. It's about making conscious choices today to secure a brighter tomorrow. It's about taking control of your finances rather than letting them control you. Embrace the journey, stay committed to your goals, and enjoy the peace of mind that comes with knowing you're on the path to a secure and fulfilling financial future. Special thanks to Wikipedia for providing a structure of knowledge. Thank you for watching our channel. If you found this video helpful, please like, subscribe, and hit the notification bell for more insightful content. Stay tuned for our next video.